Most business owners think they overpay on taxes because they miss deductions. Occasionally that's true, but usually that is not the real problem. In our experience, working with growth-focused business owners, the real reason people overpay taxes is because their business structure never evolves as the company grows. The entity election stays the same, compensation stays reactive. And tax planning happens maybe once a year, instead of being designed as a long-term strategy looking far out. Today, we want to walk you through what we call structural tax architecture and why the structure of your business matters far more than small deductions, although don't miss the small deductions. Most owner-operators start the same way. They launch a business, they form an LLC, and then they stay in that structure for years while the business grows, never looking at changing it. The problem is that the tax structure that works at $100,000 of income is rarely the optimal structure at $300,000, $700,000, or $1.5 million. As revenue scales, the tax architecture should evolve. But for most businesses, it doesn't, which means the owner ends up paying taxes based on a structure that no longer fits the size of the business. Let me give you a simplified example. Imagine an owner-operator generating $600,000 in net profit. If that business is operating as a disregarded LLC, so they're filing a Schedule C, then essentially all of that income is exposed to self-employment tax, an extra 15.3%. That means the entire amount flows through and is subject to Social Security and Medicare taxes. Is anybody going to get Social Security these days? Now, compare that to a properly structured S-corporation election. In that structure, the owner pays themselves a reasonable salary, and the remaining profit flows through as a distribution to the owner, not subject to the self-employment tax, if structured properly. So let's use, for example, a $600,000 profit, a $220,000 reasonable compensation. The remaining profit may avoid self-employment tax exposure. That's great news. That can produce meaningful tax efficiencies when structured correctly. Now, of course, compensation has to be reasonable, depending on what you're doing, and this should always be modeled properly. But for this example, it illustrates the concept. Structure matters, and you should be proactive about it, not reactive. Another way to think about tax planning is through the inflection points that you see during the year.